We are joined now by Peter Schiff. He is the CEO of Euro Pacific Capital. Thanks so much for joining us here on Newsmax Now. Good to have you.
Thanks for having me on.
All right, Peter. So in your opinion, what was the biggest driver on the market slide today? Is it more fear and emotion than real fundamentals?
No, the fundamentals are driving this, and it's not China. I'm sure that you can get some cheap political points for the populists and the socialists, although Carly Fiorina's comments weren't all that bad. But the media is blaming this on China. Look, the Chinese market is going down for the same reason that the U.S. market is going down. It's not that China is causing our market to go down. Both markets are responding to the Federal Reserve's threat to raise interest rates. It's the Federal Reserve that's been propping up the U.S. economy and more specifically the U.S. markets to the detriment of the U.S. economy. But the Fed was propping up our markets with quantitative easing and 0% interest rates. They've already ended quantitative easing. They're threatening to end 0% interest rates. And if the Fed takes away the props, the market's going to implode. It's not just the 580 points we dropped today or the 530 on Friday or the 350 on Thursday. We have thousands and thousands of points to surrender if the Fed is actually going to follow through with its threats to raise interest rates. Now, I think they're going to back away. I think the Fed's going to call off the rate hikes. In fact, I don't think they ever planned on raising rates. I think the whole thing was a bluff. The markets just haven't figured that out yet. I think the Fed's going to come back with QE4. It's going to hurt the real economy, just like QE3, 2, and 1 did, but it is going to blow some air back into the stock market bubble.
But, Peter, we wouldn't know that until, what, September 16th, September 17th? So what happens from now until then?
Well, if people are already pushing back their expectations, I think Barclays came out today. They had been in the camp that the Fed was going to raise rates in September. Now they're looking at March 2016. Look, the year began, we were divided between two camps. Those that thought the Fed would move in March and those that thought they would wait till June. They were both wrong. I was the only one that was saying the Fed won't move at all in 2015 because they can't do it without pricking their own bubble. Well, Peter, of course they should. Yeah.
Peter, you've also said, that gold is going to be on a moonshot coming up soon here. Now, we look at gold today. It didn't do quite as well as some of the other safe haven markets. Why is gold, if we're for such a downward spiral, why is gold not the safe haven it once was?
Well, gold is up $80 in the last 2 weeks, but it's not getting the safe haven flows because people still haven't figured out what it is they have to flee. They're still buying the dollar, although over the last week, they're buying the euro, they're buying the Swiss franc, they're buying the Japanese yen. The only currencies against which the dollar is now rising are commodity-linked currencies or emerging market currencies. So the game is changing, but ultimately people are going to move to gold, especially when they figure out that it's 0% interest rates forever and we're getting another round of quantitative easing.
Well, it sounds all too familiar when you look at the past economic troubles this country has seen. Peter Schiff, thanks so much for being with us, CEO of Euro Pacific Capital. I would imagine we'll be talking with you again as things continue to look pretty bleak out there.
Yeah, well, anytime. Look forward to it.
All right. Always great to talk to Peter.